Alright, for this video we want to go through a sample form 1040X for the 2023 tax year. And in this scenario, our taxpayer here needs to amend his Form 1040 because he forgot to include foreign taxes paid on his return, which were eligible for foreign tax credit. So we've got the Form 1040X here, which we'll go through. It's 2 pages. And we've also got to the amended 1040 for 2023 as well, so we'll cover the changes that were made. And then we also have the original return as filed, so we can see where we messed up on the original filing and what needs to be fixed. And then lastly, just one slide here covering some background on amended returns and then some more details on the fact pattern. So when we talk about making changes to our 1040, it's either through an amended return or a superseded return. So amended tax returns don't replace the original filing. So the original filing remains as is, but we're just correcting for errors or omissions. Or in some cases, we can file amended returns for carryback claims like FTCs or NOLs. Now, the amended returns can generally be filed anytime, but there are going to be certain statute of limitations that apply with certain types of refund claims. So, for example, if you want to file an amended return and it's going to result in you getting a refund from the IRS, you've got to file within these appropriate windows, or else the refund claim will be denied. The IRS will just keep your money. Now, what's unique about the foreign tax credit in this scenario is, so this is the general kind of rules, right? 3 years from the date you filed your return or 2 years from the date you paid the tax. Foreign tax credits have some other unique nuances because they have a 10-year period to change taxes from deduction to credit. There's also different rules for filing for a carryback claim, because generally you can file, if you have unused foreign tax credits, you can file an amended return for the prior year to carry that credit back. But in this case, we're not going to have to deal with any of those issues. And again, this is the general rule here. But always important to check the statute of limitations specifically on what you're trying to do to make sure that you have enough time, or you might have more time than what you originally thought. Now, for superseded returns, this is a complete replacement of the original return. So it's not an amendment. Now, superseded returns are great, but there are much more stringent filing deadlines on when you can file these. So the superseded returns generally filed after the original, but it has to be done before the filing deadline for that year. So it's got to be before the original deadline, or if you filed an extension, you'll get up to the extended deadline. All right, so let's look at our fact pattern here, and then we'll take a closer look at the 1040X itself. So we have John Q. Taxpayer here is a single filing taxpayer, and he timely filed his 2023 Form 1040 in March 2024. Now, he did not file any extension requests for that year. So during 2023, he was invested in a regulated investment company, or RIC for short, and he received ordinary dividend distributions of $6,520, and that number comprised of $3,005 of qualified dividend income and then $3,515 of non-qualified. Now, John correctly reported these dividends on Schedule B of his return. He included it in his taxable income, paid the tax. However, John failed to recognize on that consolidated 1099 that the dividend income he was paid actually included $2,600 of foreign source non-qualified dividends, and there were foreign taxes withheld at source of $340. So he's filing this amendment to include a Form 1116 to calculate his foreign tax credit and see how much available foreign tax credit and carryovers might apply. So if we look at the original return here, this was the original return as filed. We can see on lines 3A and 3B, he's got the dividend income in there, right? And that's also reported on Schedule B as well, the total ordinary dividends. But there's no 1116 form for any kind of foreign taxes. So no foreign tax credits are being calculated, none are being claimed. So on the amended return, that's where he wants to pick up for that error. So the 1040X here, we've got the 2023 year entered, John's first name, last social security number, his address. His filing status is single, and that's remaining unchanged for the amended return. And so now we need to input the original amounts as they were reported, the correct amounts after we make these changes, and then the column B, the net change, is the difference between the two. So let's have a look first at the actual changes that happen to the 1040. So we'll see up here that there's no changes to the income, right? Because everything was still reported, we just missed the foreign tax credit. So his wages remain unchanged. There's the 6520 and the 3005 of dividend income. So the AGI remained the same. Standard deduction remains the same. The QBI deduction remains the same. The item that's changing here is the amount reported on Schedule E for the foreign tax credit. So what John's done here is he's completed an 1116 form. So I won't cover this form in too much detail. I've got a lot of other 1116 forms where we go into more depth, but we'll just run through the basics, right? So it's an 1116. We're talking about passive category income here. John is a resident of the U.S., and so when you have payments from a RIC, you don't have to input the specific foreign country. You can simply put RIC to show that this was a distribution from a RIC, and then report the dividend income and the gross amount of foreign source dividends. So the 6,500 of dividends, 2,600 is foreign source, and so he completes the deductions and losses section down here to allocate a portion of his standard deduction. So we have the net taxable income allocated to foreign sources of $21.51. Now in part 2, he's got the $340 of taxes withheld at source. And when you have the taxes withheld at source reported in US dollars, reported on a 1099, you don't have to enter a date paid or accrued. You can just put 1099 taxes. And so in part 3, where we figure the amount of credit that's available, we have $340 of foreign taxes available. The foreign source net taxable income is $21.51. And so when we look at our total tax liability of $94.50, the available maximum amount of credit that we can take for the period is $325. So there is this FTC limitation, which depends on how much foreign source income you have relative to your total taxable income. So of the $340 in foreign taxes withheld, we're going to be able to claim $325 for the current period. Now, the remaining amount, the $15, gets reported on Schedule B as a carryover. So on Schedule B here, our FTC carryover, in page 2, John is reporting on line 6, column 13, the current tax year, we have $15 of foreign tax credit carryover generated in the current year. And so this is going to be the amount that's carried over to next year. So now all of those changes have been made, and we see now that the amount of foreign tax credit that's being claimed is $325. So that's reported on Schedule 3. So we have non-refundable credits, FTC from Form 1116, $325. All right, so now that's all the changes that are being made. So how does that get reflected on the 1040X? Well, the 1040X, column A, are the original amounts as they're coming through from the original return. So it's pretty straightforward, right? You're looking at your originally filed Form 1040, and you're pulling through your AGI, your taxable income, any kind of QBI deduction. And so that's what we have here. We have the AGI of $80,000 to $20,000, standard deduction, QBI deduction, the amount of tax. We are using the qualified dividend capital gain tax worksheet to calculate the taxes, so QD CGTW. And then we had the federal withholding of $10,000. Now, the amount of refund that John had on his original return was $550. So if you look at page 2 of your original return, $550 was the original refund amount, and so that's reported on line 18. So now we need to look at column C and enter the corrected amounts after we made these changes. So the AGI, standard deduction, our QBI deduction, all of those remain the same. The amount of tax remained the same too, right? Because remember, we haven't changed anything on the income side. Taxable income is still the same. We're still using the qualified dividend and capital gain tax worksheet. What has changed are line 7 amounts for non-refundable credits. So on the original return, we didn't have any credits, and then now we have a $325 credit related to FTC. So now we have our total tax owed, as adjusted, is now $9,125. Payments remain the same. So now we do the variance here, and it all makes sense, right? We're getting a $325 refund. So the overpayment was $550 on the original return. If we subtract line 18 from line 17, we get $94.50. We're not going to owe any amounts. All right, you would owe an amount if line 11, column C up here, is more than line 19, but it's not, it's less. So the difference is the $325 amount, which is the amount of refund that we're getting when we're filing this amended return. So $325 we're going to get back. And then in part 2, we explain what happened here. And then we also highlight that we have some unused FTC, which can either be carried back or it can be carried forward. So the FTC amounts have to be carried back 1 year first, right? And then they can be carried forward. But in this case, we don't have any kind of foreign source income in the prior year, so it wouldn't matter to us. But we just highlight here in just a short paragraph explaining what happened, right? So the amended return is correcting the reporting of foreign source dividends, foreign taxes withheld, and foreign tax credits. The taxpayer received $2,600 of foreign source non-qualified dividend income from a RIC. The distribution includes $340 of foreign taxes withheld at source. Taxpayer correctly reported the dividend income on Schedule B. However, taxpayer should have included IRS Form 1116 for foreign tax credits to report the foreign taxes withheld and calculate the available FTC. The taxpayer can claim $325 of foreign tax credit, resulting in a $15 foreign tax credit carryover to 2024. All right, and then I also like to include just a copy of the changes to the 1040 and then put a watermark or a stamp that just says as amended, so the IRS agent reviewing everything can see that, okay, we've completed the 1116, we've completed the carryover worksheet, Schedule B remains unchanged, we've now added a Schedule 3 to report the credit, right? So everything is in there that needs to be, and you've laid out on the 1040X exactly what happened and what changed, and then they should be able to process this additional refund request for you. All right, so that covers it for this scenario. Hope that was helpful. As always, appreciate you watching, and I look forward to seeing you on the next video. Thank you.